I've been using Morningstar since the first year as one of my primary tools. I've been using StockCharts, obviously, since about 2000, 99, 2000. So I thought it would be interesting just to talk a little bit about how I use this tool. You might find it interesting, and it is a powerful tool. So the usual disclaimers, I've used it for a long time. No, my uncle doesn't work there. No, I'm not being paid anything for the presentation, and I'm not responsible for what you do with this information. So read the fine print, email questions to Morningstar. The disclaimers apply to all the lovely individual investors listening in. If you happen to be a grouchy investor, it applies to you as well. So Morningstar has, much like StockCharts.com, it does have a free limited user base. It also note that you can get premium Morningstar generally free through your library. The third option would be check with your brokerage site, because many of the brokerage sites, I know a couple of them, my brokers actually use Morningstar data. Another option is they have a 14-day free trial, so you can do that. And I'm going to demo, I'm a premium member, I pay for it. I'm not even sure what I pay. I think it's like $20 a month or about $200 a year. So I'm going to demo everything to do with the premium services. So this is basically the home page. If you scroll down to a little bit in the home page, you can see the 4 pods that is Morningstar: stocks, funds, mutual funds, ETFs, and then bonds. So let's talk about stocks initially. They cover about 4,000 stocks. Now, this is your stock page. Note they have mobile access now, which is available on your smartphone, which is great. The site for stocks is ideally oriented for value investors. It has minimal charting, and its whole orientation is about towards the value investor. I am not a value investor. I use Morningstar for value investing, for that asset allocation pod. I use mutual funds like the Yachman Fund, which is a value fund. So 19 of the asset classes that I personally invest in, I either use ETFs or I use mutual funds. The one asset class that I trade actively is large cap stocks, but I do not use Morningstar very much for that. And one of the reasons is if you look at General Electric, for example, if we happen to put in General Electric here just as a stock, they're rating General Electric right now as 4 stars. Back November 13th, they had rated it as 5 stars. They actually rated Enron as 5 stars just before it went belly up. So there's a reason that I'm not really a big fan of, so that's the bad news, a big fan of using Morningstar for stocks. It's simply not the kind of investing that I do. They do have an ETF which has done pretty nicely. It's based on their strategy of moats, having companies that are surrounded by wide moats. And the ETF on that is MOAT. And it's actually over the last, since 2012, the NYSE was up 55%, and this MOAT was actually up 142. So I'm sure Morningstar gets a royalty for letting them use that. But I just don't see it for stocks. When you have a stock like General Electric that was at $30, and now it's down at $7, and they're rating it 5 stars or 4 stars, not my kind of stock. So we'll move on. But if you're a value investor, good stuff. One of the foundations, I'm going to go to this page here. One of the foundations of all investing, I think, is you have to start with asset allocation. So I'm just showing you my blog, the Trader's Journal blog that I write with Grayson. If you click on stage 1, which is all the blogs that we've written about asset allocation, And an example of this is on October 23rd, 2015. I've been writing this since 2012. It talks about the different kinds of equal weight strategic asset allocation, or you can do a fixed mix or tactical. Those are things that you really need to get down first. And then understanding that, then you'll be able to really utilize Morningstar to its most effective, really use it as a high leverage tool that it can be. And asset allocation from an individual investor standpoint is probably the number one high asset. We actually wrote, you can see here that Grayson and I put together this video. We were hoping to have Wiley put it in our book, but they ended up saying that the book would be too expensive. So we ended up not doing that, which was a shame, but you can actually pick that up. So enough about the stocks. I'd like to move on to ETFs. So this is your homepage for Morningstar ETFs. And I'd like to point out that they have started rating now ETFs and medalists. So it's a wonderful place to go and look at whether you're looking for an ETF in a specific asset allocation, basket, or doing a comparative. It's really a very useful tool. So that is one area that I do use Morningstar a lot with ETFs. They've rated now about 400 ETFs, and I know in the chart pack that Grayson and I put together for StockCharts users, we've actually put a lot of their top-rated ones in that chart list. So it makes it easy for you to see that. So if we go back to that main page, the other list that I like very much is just looking at ETF returns. Looking at this list and whether you're looking at 1 month returns or let's say 3 month returns, you can see which of the ETFs are hot. Where is the money flowing? It's almost like a breadth indicator. You can see all the way down the list. So it's sort of answered. This is something that I do on a weekly basis. I like to go in and see what's happening. I think it's very insightful. If you're a shorter term trader, then go ahead and go back to the 1 month returns. I sort of bounce between the 1 month and the 3 month. Then the other thing that I like to look at is their analyst reports. These, when you've narrowed down a specific, you're sort of focused in on a specific ETF, these can help you get a full report and get an idea of what their analysts are saying about its suitability and its fundamental view. You can see they have this big thing about what they say is the fair value. I like the pros and cons. It's always good. I use this in parallel with ETF.com, which is another free site. My experience is it seems to run a little faster if you register, but there's no expense involved, and it's a useful tool. So looking at these analyst reports, I find that to be a really great tool. We go back, the other tool that I do like to use is the cost analyzer under ETFs. So load, please, thank you. So if we go and, well, let me skip that because I think it's going to take a little more time than I'd like to explain how all that works. But if we go to Analyzer and then go to Tools, I think that's what, here you have some wonderful calculator screening tools that I do use, I do find useful, but again, I find them useful used in parallel with ETF.com, which is sort of my go-to tool, and using them. They also, Morningstar does publish hard copy, something called Morningstar ETF Investor. It's a great publication. It has all their top-rated ETFs listed. They call it their equity watch list. It's done by asset class. It shows you the fees, the stars, the analyst ratings, the performance. I'm a Sunday afternoon, put up my feet and read. So I like to do that exactly with the hard copy. But let's get into the meat of it. This is what I use the most, the Morningstar mutual funds. That's what they started doing many, many years ago, and they keep improving upon it. I don't think there's anybody out there that's as good as they are. And again, your broker's using a lot of their data as well. Well, I should have. This is an issue that has happened before when they try to get me to it logs off, for example. See, I'm in right now. I'm in funds, and I go to Morningstar Medalist. So it should take me there, shouldn't it? But it doesn't. So that's a complaint, if you will, that I have. So we may have to skip over that. Let's try medalists by category. I'm logged in. What's going to happen? Medalists by category. Terrific. Well, let's try to do the slow way, and we'll have to sign in. I apologize here. Sorry for the silence. Okay, so now we go back down into funds. And let's try again with the medalist category. Does that? No. Well, there's a glitch. Nice complaint. So let's try something else. We'll try the analyst ratings. Does that take me where we want to go? Oh, you love this technical stuff. Okay. Well, we'll pivot a bit here. Since we can't get medalists, all rated funds, here's a tool that is really very, very powerful that I've used to put together my best of breed for each of the classes that I have. For example, one of the asset classes that I do invest in using mutual funds is mid-cap stocks. So I'm looking for mid-cap mutual funds, and the way that I do them is I sort them by performance, and then click on the 10-year because I'm looking for something longer. And I have to admit, I do own this PrimeCap fund, and I've owned it for a long time. Unfortunately, it's closed, but PrimeCap still has two funds that are open, and we'll talk about that a little bit. But let's go to this PrimeCap fund. So this is the page that shows you, has all the tabs to show you what it can do. One thing very powerful you'll notice up here on the fund family data page. It's an interesting, if you haven't noticed this, what this shows you is it shows you the PrimeCap funds, all the funds here that PrimeCap runs, and it shows you what their most common investments are, where their top US holdings are. You can do this for any of the funds, but PrimeCap, it's a wonderful little button. And because PrimeCap is such a gold star kind of house, I do like to check on it. Obviously, this is what most of us go to the PDF file, and we go to this page, which is a very powerful page, shows you how many, what their assets are. You can see here their quartile performance over the years, and then what kind of percentile rank. I like to focus on this tax-adjusted returns, because it's what stays in your pocket that really matters. So this is what you have your analyst writing what I usually print out and stash in my, I'm still an old school, I still use binders. Another thing, another really key button is this purchase button. You can see that in this case, we have PrimeCap Odyssey only has one class of fund. And if you hover over it, it'll give you the symbol POAGX. That is not true for many of the different funds that are out there. There are some American funds, for example, that have, I think they have about 13 different classifications, and I'll show you just put in a ticker symbol here. You'll see that this can really save you a lot of money. Here you have one fund. Now understand, guys, that this is the same fund in 17 different flavors, 17 different tickers. It's all the same portfolio. The only difference is they differ by the expense structure. So if you go down here and compare CGFFX over the life of the fund, you've actually been up, the fund's been up 310%. If you compare it to another GFACX, same fund, different expense structure, you're only up 263%. That's an 18% return, higher return, simply from the fact that you're picking the right flavor. So that's why I think that little button there is so critical about understanding. Oh, the other thing, you can look down here and it'll tell you where you can buy them. But if you go to different funds, there'll be a much larger list. So this is a very, very powerful list, I feel. I'm going to go to, we'll sort of focus on the PrimeCap fund, just because I like to look at it because the performance is nice. But so I've showed you the family button. You can look at charts, you can do the fund analysis. Then they also have a wonderful performance button here that you can expand. So it can show you how it's performed relative to the indexes. It can show you the percentage over 3-year, 5-year, 10-year. You can see it's finished in the top 1%, and then some other lovely data. The risk and ratings page is very powerful, especially when you're comparing different funds. I like to print this off. And then management. Notice that the guys that are listed here as the managers, there's 212 since 2004. Also notice their background. These are top tier schools. These are top tier managers. They've been around a long time. That's the way that a great mutual fund is run. And PrimeCap, I think, is an example of that. Stewardship is a rating that Morningstar has applied to the actual mutual fund house, the PrimeCap money management house. And they get glowing reviews. In this case, we can look at the portfolio and see exactly what their holdings are. I like to go in and see what the holdings are each quarter for the top funds that I own, because when I go to track, when I own a mutual fund here, and you can see their top holdings are not the Amazons of the world. They're significantly different than what you get the vanilla funds. This is a mid-cap fund, though. You have to remember that. Much like Grayson and I do with the chart list and looking at Fidelity Select Sector funds, looking at what they buy and sell at the end of each quarter because they have to report that, I do that the same with the top funds. looking at where are they moving money, what are the equities they're buying and selling, and I find it to be a very powerful, provide some very powerful insights. Obviously, the expense button is really, really important. I only buy no load funds, and I make sure that I'm minimizing the expenses. You can see here, this house, PrimeCap, also manages a number of funds for Vanguard under the Vanguard PrimeCap label. But as I say, there are only two that are still open. Now, one of the nice features here is something called find a similar fund. So when you want to find a similar fund to something like POAGX, which is closed, you input the fund that's closed, and it'll give you a list of alternatives that are most similar. So we know the PrimeCap's closed, so why don't we take a look at some others that might be similar? We can hit this performance button. It'll show you the performance compared to its sort of sister funds. And then you can do some homework and say, okay, well, unfortunately, I can't get into this fund, but loading quickly, isn't it? My apologies. Okay. Well, let's take a look at, oh, there it goes. Okay. So you can see what the performance, some of the funds don't have 10-year performance, but you can see why I'm invested in the PrimeCap Odyssey Fund. 10-year performance, 21%. It outperforms all its brothers and sisters. So a very nice fund. But another very powerful tool I feel that I use quite a bit is called Fund Compare. This is free. This is a tool that all of you can use. And in this case, let's say in the mid-cap space, that what I just showed you, if we enter a couple funds, you just enter them here in the box, and then we can do a number of different kinds of comparisons. So there's your three funds, three mid-cap funds. We're going to show the comparison. How do those three funds compare? Well, you can see all of them are pretty darn good funds in the mid-cap space. We can look at some risk and tax data on them, compare them that way. We can look at their portfolios, compare them that way. We can look at some nuts and bolts. So it's a very useful tool to very quickly compare whatever, and as I say, it's free. It's a great tool that way, simply because it is free. I wanted to encourage you. I'm looking for my notes here. The two Vanguard, two PrimeCap funds that are still open, which I would really encourage you to look at, because I think they're long-term, that they're low expenses, and they're wonderful funds. Here's an example of what that is. The ticker is POGRX. So this is a fund that is a PrimeCap fund that is open. You can see here that it over 3 years, 5 years, 10 years, over 10 years, you've had a tax-adjusted return of 15%. Notice the R squared, because if you have an R squared of 1, basically you have an index fund. So what are you paying for? But you can see their long-term performance has been very, very good. It's a low turnover fund, so it's not you don't get a lot of distributions. And you notice that most of the time here, it's in the top 2 quartiles versus its brothers and sisters. You can see too that the expenses are low, and it's a wonderful fund. I would really encourage you to look at that fund. Also, when you go down here and hit purchase for this fund, you'll notice once again low fees, but you only have one ticker symbol, POGRX, unlike that American fund that I showed you, which had a zillion ticker symbols. So that's very different. Another really key function of Morningstar, a really powerful function, is something that's their portfolio manager, which has some unbelievable tools built in. What I've done is I've loaded the 20 asset classes that I invest in, and I've just loaded in mostly ETFs to show you how this works. You would load in your portfolio, and then you would be able to look at different views. For example, you can see here, in this case, this is just a fictitious, everything's 100 shares, but this does represent all the 19 asset classes that I invest in. Then you can look at, create my view. So there is the view that I created, and looking at different parameters, percentage returns and 3-month returns and that sort of thing. You can have a number of different return views, very powerful. And this is all very easy to lay out. So from a portfolio manager standpoint, I think it's a really powerful tool. It does a couple things. It does portfolio monitoring. It does this X-ray function, which I'll show you in a second. It does X-ray interpreter, which is very powerful. I'll show you that. It's really, this tool is worth the entire price of Morningstar. So what X-ray does is it takes your portfolio here and it unbundles it. So when you hit X-ray, let's assume that your entire portfolio are these 20 asset classes. So it shows you where your portfolio's invested globally. In this case, because we're dealing with ETFs, American ETFs, you can see it's not terribly global, but it shows you the largest positions, and then it allows you to do different kinds of cuts. So here we're doing the X-ray overview, but you can hit X-ray details, and then it breaks it down even further. Or the X-ray interpreter, this actually gives you some insights from an asset allocation standpoint to say, hey guys, here's maybe what you should look at. And then a tool that I'm always shocked to find, when I run this on my own portfolio, which about 10 years ago I did this, and my largest single position was Berkshire Hathaway. And I did not own any Berkshire Hathaway directly. But because the mutual funds and the ETFs that I owned, because of those, suddenly that was my biggest holding. The usefulness of this tool is that this is what you already own indirectly through ETFs and mutual funds. So if you're going out there and you say, oh, I'm going to buy United Health Group, well, maybe you need to look at that a little closely because you already own a big slug of United Health Group. So that is how I use this list, by unbundling my portfolio and looking specifically at my positions. The other thing that will shock you sometimes is the percentage of cash that you're holding that you don't even realize you're holding, because mutual funds hold cash. And so this is a great tool to give you that kind of insight as to what is being held by your particular fund. I think what I would like to also pitch you on, if you will, is there was a blog that I wrote some time ago. It was in March, and it was, the title of it was "Why ETFs Are the Best of Breed." And what I'd like to show you is just discuss some of the things I discussed in that blog because it'll make sense. What I point out is that in my own search of the blogs, in half the cases, in half the asset classes, the best of breed are ETFs, but the other asset classes are represented by mutual funds. So let's see, blog articles, I think I'll just use. Okay, this blog is worth looking at because it shows you why a tool like Morningstar is so valuable. Because I maintain these kinds of charts for all of my asset classes. And the benefits in this case, what I'm looking at is mid caps. The green line is always the Vanguard Total Stock Market Index. And then the other lines are, they're always ETFs. In this case, JKG is the mid cap ETF that I thought was the best breed of all the ETFs. And then you can see what I do is I load it with sister mid caps and compare them. So when somebody comes to me in the mid cap area and says, Gatis, you should look at this ETF or this great new mutual fund, I just quickly put it on my best of breed chart and see what happens. Well, you can see here that compared to the market or compared to the best ETF, I should own the orange fund, shouldn't I? Which is prime cap aggressive growth, which is what I own. So this is the way that I'm always making sure that I'm in the best of breed, whether it's ETFs or mutual funds, and I use Morningstar for that purpose. Here's another example. This is biotech. One of my asset classes is biotech. I just feel as though 10 years from now, they're going to be up. I mean, they're doing extraordinary things, but I don't have a big staff, so I have no staff. So I'm just choosing myself how do I want to invest in this? You can see that I have mutual funds. You can see the market here. The best ETF I have found is XBI. So I use the XBI ETF for covering the biotech area or asset class, and I do not use a mutual fund because, as you can see in this case, the mutual funds have not, there isn't a mutual fund really that's outperformed XBI. Now, there are other reasons. When I go to look at comparing a particular basket of ETFs, or in this case, let's say biotech, let's focus on biotech, I will go to Morningstar, go to their ETF section, look at what they are saying are the best biotech ETFs. Then I will go to their Morningstar biotech asset class for mutual funds. And I will also go to ETF.com. ETF.com is a wonderful, I'm not going to go to the site, but I would encourage you to check it out. It offers you sister ETFs. So if you input XBI, it will offer you similar ETFs in that asset class, and you might go back and compare those to what it is you're looking for. So this blog, I would encourage you to take a look at this blog because it's really the foundation of my investing strategy, if you will. It all starts with understanding your asset allocation, understanding which of the, in our book, for example, Grayson and I winnowed down the hundreds of asset classes that Morningstar presents and the thousands, literally thousands of asset classes that ETF.com presents. And we winnowed it down for the book to 59 asset classes. Those 59 cover everything you need to be completely diversified. And then in the book, we calculated our correlations to the market for each of those asset classes. And then we put together in my case, as I said, I have 20 asset classes, and it's run exactly like this blog describes. We actually, in the chart pack, let's try that, see if that works. This is the chart pack that Grayson and I put together each quarter. We update each quarter with the latest holdings. And so this magically downloads, if you have a StockCharts account, it magically downloads 96 chart lists. But one of the chart lists has all 59 of those asset classes that allows you to really dig in. So from there, I identified the 20 asset classes that I use, and then 19 of those are ETFs or mutual funds. And as I said, my large cap, U.S. large caps are the individual equities that I invest in. Those generally are, I don't go over 10 positions. If I want to buy something new, I'm basically saying, okay, which of the 10 positions that I have do I get rid of before I would buy? So my point here is that there's a lot of thinking that goes in building foundational building before you jump in with both feet and start using Morningstar and picking, whether it's stocks if you're a value investor, or picking ETFs or picking mutual funds. It is a great resource, and it is worth, as I said in the early disclaimer, I'm not, I feel as though those two services, StockCharts and Morningstar.com, are worth paying for. Now, you can also go to the library and get it for free, or check out your broker and see if that works. But well, I'm sort of curious to try the go back to my ETFs and let's see if that works again. Or well, okay, so there you go. You can get their medalists. You can see what their returns are. They do it by category, so you can group them by category. So if you're looking at a particular U.S. large cap growth stocks, you see here you go. So there's an ETF. So there's an ETF that you want to compare it to. There's some really wonderful mutual funds out there that invest in this space. And so that's how you would use Morningstar. Let's try this valuation quick rank. Remember I showed you that? No, it's going to take us back to the quick rank function is really powerful in the mutual fund area. I use it a lot. I think it's just a fabulous tool. So if you pick another, and this one is not a premium tool. This is something that is free, and all of you can use that. So if you do pick another category, let's say you want a balanced fund, what do we see there? Well, it's a great tool for generating ideas. It's also a great tool for validating your existing position. And no coincidence, obviously, I knew I was going to the 50 to 70 equity, but this is a fund that I've owned for a long time as well. It's just one of those fabulous T. Rowe Price funds. You can see it's 5-star, but you too could find this fund. Look at these, number one over 5 years, number one over 10 years. And the main thing is on a tax-adjusted return basis over 5 years, it's in the top 1% over 10 years. So these people aren't suddenly going to lose all their IQ points in overnight. So these are the kinds of funds that you want to be into, and you want to use the power of that best of breed graph, if you will, to find these kinds of I was going to take you back to my my own portfolio and show you the chart list that I have, which this shows you. Well, we'll take a look at it here. So here are my asset baskets. So these are the asset baskets that and this one should look familiar. I showed you that. It's the mid cap. Best of breed. This shows you that prime cap fund again. But I do this for, I showed you the biotech. So you see how I maintain these funds. We looked at US allocation. So in this case, obviously, as you would expect, there's your T. Rowe price. It's up about 150 versus the market, but look at the volatility is much less. But look at its sister ETFs, sister mutual funds, and the black line is the ETF, the best ETF out there. These are sister mutual funds. And this was all constructed using the Morningstar tools. So I would really encourage you to put these kinds of charts together, maintain these kind of charts, and it allows you very quickly to look at ETFs or mutual funds and compare them to the best of what is out there. Anyway, I think we've covered what I wanted to cover here with you for Morningstar. Let's take a look.
Gatis, can you just show people how the settings on your chart?
The settings obviously vary. Now, if you were to put in, I hope some of you are familiar with this, but if you were to put in a stock up here, let's say Amazon, and then you pull down the chart styles at the very bottom, I'm below everybody, but if you'll find my name, and then what you get is this tensile trading. Grace and I call this the tensile trading format, because you're comparing in this top chart, you're comparing how is Amazon doing relative to VTI, VTI being the market. How is it doing? How is the sector that Amazon belongs to? How's the sector doing relative to the market? Then you look at the industry group that Amazon belongs to. How is the industry group, because sectors are made up of industry groups, how is that industry group doing and relative to the sector? And then the bottom one is how is Amazon doing relative to its brothers and sisters in that industry group? So this is a format that you can change the ticker, pull it up very quickly. And then the other thing that I'm very big on is money flow. So I'm looking at on-balance volume and shaken money flow. So being a Wyckofian, I'm a bit of a volume junkie. But this is my go-to layout for stocks. For mutual funds, it's slightly different. And again, I've saved these little, see down here, if I hit mutual funds, it gives me a format. I'm looking at how the Sequoia fund is doing relative to the market, and it's underperforming the market. But then I'm looking at momentum, and then when is it issuing dividends? For those of you that might be a little more newbies, this is something you really need to focus on, because if you use a little inspection button, go down here, and you can see that Sequoia fund has paid, in the past, has paid distributions on these particular dates. So they just paid one November 19th. That's something that you should know, because the worst thing you can do is buy a fund on November 17th, and then 2 days later, they have a 30% distribution. And this year, the distributions are going to be pretty significant. And you get your money back in taxable form. So this layout is something I think if you own mutual funds, it's something that you really, everybody should be aware of this. Anytime you look at buying a fund, please be aware of their sort of historical distribution dates. And I will tell you, ETFs also, don't think ETFs don't have distribution, especially the crazy leveraged inverse. Those guys, they're meant for day traders. They're not meant to be buy and hold for a long time. So do check the historical distributions on that, because that can be really painful. So hopefully that gives you a bit of a summary on how I've used Morningstar. As I say, my uncle doesn't work there or anything. I just think it's a great tool. For the folks that have used the freebie service, they inevitably migrate to paying it used to be $10 a month, or going to the library and using it. So great tool, especially when you're used with stock charts in tandem. Fabulous. It's like 1 + 1 = 3. Anyway, that's a bit of a recap.
Great. Well, appreciate that.
I should say I don't use it for bonds. I'm sorry. I don't feel like I'm old enough to buy bonds, so I don't use the fourth pod in Morningstar, which is the bonds. That's it.
Yeah, very nice presentation, Gatis. I do want to say, looking at the overall market and with all this volatility, I know to some extent you kind of ignore that, but Greg and Aaron and I are going to talk a little bit about 2019 market forecast. Do you have any thoughts next year and everything that's happened, here in the last couple of months?
Let's just focus here in December, because I said this earlier. The distributions this year for mutual funds are going to be very significant. And a number of funds I've taken off the table. Again, I use Morningstar for this. Morningstar sends me an alert to say Harbor International, which I'd had for 20 years and done very, very well. They fired the previous manager. Well, we see this with the chart pack. We see this all the time when Fidelity changes their portfolio managers in their sector funds, and the new manager comes in and sells everything that the old guy had. Years ago, this happened with Fidelity, with Magellan, and they had this huge distribution of like 33%. And I had a gentleman in my class that happened to have the misfortune of buying that on Monday when they had the distribution on Wednesday, and he got literally $30,000 of his own money back in 2 days in taxable form. So I'd like to focus on, be aware that of what I just pointed out, of the distributions for both ETFs and mutual funds. Things like the Harbor Fund that I mentioned, I sold it and before they, because the new manager was no doubt going to make some huge distributions. There have been a number of, the Fairholme Fund is another example that I sold quite a few months ago for management changes and just performance and those sorts of reasons. So I'm really, in December, I'm not much of a buyer in December. The other thing, I'm really focused on earnings, and the S&P earnings are doing pretty well. So I'm not jumping off off the ship. This year we've had 5 higher lows. Every retest has been higher. Yes, it's been a retest, but each of those retests has been at a higher level. So I take seriously the sort of double bottom that we've had here over the last 2 months, and I'm sort of looking for insights from that.
Okay. Well, we pulled the poll up regarding Morningstar, and you gave a great presentation on how you use Morningstar. And it looks like of those who use Morningstar, they do use it mostly on like a monthly basis, which kind of makes sense, based on a lot of the information that you provided.
I hope that they would use it once they understood that X-ray function and the portfolio management function. I would hope they move from monthly to maybe bi-weekly,
Okay.
Every 2 weeks or so, because the X-ray function is truly an amazing tool worth the price of admission. So I would really encourage those people. But then you have to look at this poll. I mean, 17% of people answered, "Why is there air?" So, you wonder. Even more than those that study weekly or daily. So,
yeah. Well, it's always a pleasure having you on here, Gatis. I really want to thank you for stopping by.
Thank you, Tom. Thank you, Aaron.
You're welcome.
Greg.
Thanks for coming in.
All right.
Always a pleasure. Can't wait to have you back.
With 3 unique service levels and multiple data plans to choose from, StockCharts.com makes it easy to customize your account to best match your specific needs. In this video, we'll help you explore all the benefits of your membership by explaining our service levels, data plans, and pricing. Let's see how it works. To start, you'll want to choose from one of our 3 service levels: Basic, Extra, or Pro. Each service level represents a collection of features and options bundled together. If you're new to StockCharts, our basic service level is a great place to start. At $14.95 per month, Basic will allow you to create larger, more powerful charts and save them to your account. Next up is our Extra service level, the most popular choice among StockCharts users. At $24.95 per month, it includes all the features of our basic level, plus more saved chart storage and the ability to create custom scans and alerts. If you want it all, our Pro service level is for you. At only $39.95 per month, Pro includes even more storage for your saved charts, custom scans and alerts, as well as faster auto refresh, historical data, and much more. For all service levels, you can choose to subscribe on either a monthly or an annual basis. Our monthly renewal option is similar to most other web-based subscription services. You pay for 1 month of service at a time, and your account will simply renew automatically each month. With our annual renewal option, you prepay for 12 months of service and we'll give you the 13th month for free. If at any point you'd like to change your service level or renewal preferences, you can always do so from the Your Account page. Now that you've chosen a service level, let's find a data plan that works best for you. Regardless of service level, all StockCharts accounts come standard with our free data plan, which uses BATS real-time data for the US and delayed data for all other markets. However, if you want to enhance your StockCharts experience even more, you can customize your account by adding official real-time data plans for one or more of the stock exchanges we support. Similar to exchange fees, prices for each plan vary, as they reflect the fees charged by the exchanges for your use of the real-time data. We want to make sure you have the data that's right for you, so our data plans are flexible and can be added or removed at any time. Keep in mind that all real-time data plans are billed separately from your service level subscription and always on a monthly basis. Unless removed from your account, data plans renew automatically at the end of each billing month. If you do choose to remove a plan, the change will take effect at the end of the month. All data plan charges are non-refundable. To explore all our data plans and update your preferences, visit the Your Account page. StockCharts.com gives you the charting tools and resources you need to invest smarter. And now with the flexibility to customize your service level, renewal cycle, and data plans, we make it easy to find the account options that are just right for you. Take control of your investing in just a few simple clicks with StockCharts.com, simply the web's best financial charts.
This is a brief tutorial on using stochastics. Big word, but wonderfully simple. The idea behind stochastics indicator is that as the price moves up, the close tends to stay close to the highs, or the price action throughout the day tends to stay close to the highs. And as the trend weakens, it has trouble staying near the highs. The stochastics will point this out. And the reverse is true at the lows. So as price is declining, all of a sudden it stops always closing near the lows. So not to get confused with %D, %K, %R, that type of thing, Henry Ford started with the Model A and went B, C, D, E, F, G, all the way through to T until he came out with the Model T Success. And so when George Lane and his colleagues were doing that for stochastics, they kept working their way through, and they did the same thing. They used %A, %B, %D to try and find a rhythm that worked out nicely. So what stochastics does is it takes a range over the last few days. In this case, a 5-period stochastics would say that from this point to this point is 100%, and price closed at 82%. And then that would be percent K, and then percent D would be a moving average of that. And it's important to remember on stochastics, according to George Lane, there is only one valid signal, and that is the divergence on percent D. So you're looking for the divergence on moving average, and I'll show you that on some real live examples. So here's Apple. And I've got these stochastics set up slightly different. So this is a fast stochastic, this is a slow stochastic, and you can see that it's much smoother. It's got these whipsaws taken out, and that smoothing function is what percent D is changing for us. And then the full stochastics here, I've changed the period to 14 instead of a 5-period stochastic, just to show you that it gives you smoother signals, and so it's a little easier to trade with a 14 period, and that would be the default at StockCharts. But depending on how aggressive you want to be, you might find that there's a better way to trade. So all of these signals are important, but what the big clue you're looking for here is this positive divergence where things are improving while the momentum is coming down, and you're starting to see the stock whipping around at the bottom here, usually a sign that something's getting a little more volatile and you might get a chance. So, you know, a nice trade like this would be a great move of $30 or something like that, and it would have got you in relatively early. Here is USO, and what we want to show you on this particular area is you can see how the price is actually struggling to make any moves higher. And even though percent K keeps banging on the top here, the percent D, which is the moving average, this purple area, is moving down and making a lower high here. And it's that lower high that is our divergent clue that we want to be aware of. And then that's going to give us our sell signal. And in this case, we've got double divergence with another lower high way over here. And that is a real clear signal that George Lane likes to talk about. When you get those, it's a very valuable signal. So you're looking for the divergence on the moving average. And again, in this case, I've set up all three as 5 period moving average, but our default is 14, so you could set them up whatever way you'd like. And the way you do that is just select them from the drop down menu in here, and then pick the time period that you want.
You've got a problem. Your investments aren't growing as fast as you'd like. So you did a smart thing. You opened an online brokerage account and started learning more about the financial markets. But now you have a bunch of new questions, like, which stocks should I buy? When should I buy them? When should I sell them? You tried watching the talking heads on the financial channels, but they just gave you untimely advice that the real pros already knew about. It's all starting to feel a bit too little, too late. But what if there was a way to know, to truly know, what the market was thinking and how it was behaving, even before the pros? What if you could learn where the market was headed while there was still time to profit from that knowledge? With StockCharts.com, you can. Trusted by thousands of online investors, StockCharts.com has the charting tools and analysis resources you need to make smarter investing decisions. Our intuitive web-based tools make it easy to create high-quality financial charts in just a few simple clicks. Save and organize the charts you're watching to make managing your portfolio a breeze. And when it comes time to buy, our unique technical ranking system sifts through the markets and quickly points you to the most promising stocks and funds. You had a problem until you found the solution at StockCharts.com. Start your free 1-month trial today and see what superior financial charting can do for you. StockCharts.com, simply the web's best financial charts.
If you're interested in trading Alexander Elder's Come Into My Trading Room or Trading for a Living book, we have the settings on StockCharts to do that. First of all, the Elder candle style. Then you could use Keltner bands to set up the width. These are adjusted based on the ATR. And the force index, of course, as well as his MACD, or the regular MACD. So here's how you do that. You'd select Elder Impulse System from the drop-down menu on Chart Type. You'd select Keltner channels and pick the width that you want, and it has to be one that fits nicely. And then Force Index and MACD. And again, the way you pick the Keltner channel width is you want it to just touch the top of most of the primary uptrend bars so you get out just at the right time. Anyway, enjoy trading for a living.